Okay, anyway, so we went through initially, it should be recognized at cost. Okay, so the cost will include what? It includes purchase price less trade discount or rebate. Remember that day last week we went through an example. Okay, so we have to less out the trade rebate from the purchase price, then only we capitalize the remaining. Okay, the second one, any import duties we include as recoverable VAT or non-refundable taxes. Okay, then directly attributable cost. Just to recall back any directly attributable costs that we went through. What are some of the directly attributable costs? You bought the machine. Okay, so you paid the purchase price. What else do you need to incur? Sorry? Installation, very good. Testing costs, very good. Yes. Professional fees, yep. Okay, and also the delivery inwards, the cost of transporting the goods lah. Okay, what else guys? Sorry? Site restoration, that's this one. Estimate of the dismantling and site restoration. Okay, so for site restoration, what have you learned? Can you recognize the full amount? When are you gonna pay? Yeah, you need to pay at the end of the useful life, so you need to include it as part of your cost of PPE, so it needs to first be discounted to its present value, then add it to your cost. Okay, we also went through that there is a choice of your subsequent measurement. Moving on to your subsequent measurement, there's a choice of either using the cost model or the revaluation model. So we went through the cost model already. Under the cost model, what did you learn is each significant component should be depreciated separately over their respective useful life. Remember? Okay, so here what did you take the historical cost, the accumulated depreciation minus the accumulated impairment loss. So that loss is actually under impairment, okay guys? Okay. The loss is under impairment. Accumulated impairment loss. So can you write each component should be depreciated separately? Okay, my pen is not very nice today. Separately over their respective useful life. I just write depreciated separately lah, huh? Okay. So we went through already that when do we start depreciating is when it's available for use. Please remember that key term, okay? Now then later on we're going to look at how do we check for impairment. So what I need to go through before we look at the revaluation model is something called subsequent expenditure. Okay, this one, subsequent expenditure. Let's say when you buy a plant, okay, the plant can be used to produce 1,000 units, but you know that you're able to sell more than 1,000 units. So you need to add on, you need to improve or add on the plant. So what's the treatment for that improvement? So that's your subsequent measurement, subsequent expenditure. So it goes back to what you have learned in your accounting paper. Okay, do you still recall that there is something called capital expenditure, revenue expenditure? The first class, I'm very sure, was what is capital expenditure and what is revenue expenditure. So what is capital expenditure? Purchase of PPE or improvement in the PPE to increase earning capacity. Do you remember? Okay, so usually what will improve earning, what are the improvement that will increase capacity is things like your enhancements lah. All right, so the treatment for that is we should add it to your cost of your PPE, capitalize, and add it to the carrying amount of your PPE. Okay, where else if what is revenue expenditure is the day-to-day expenses of running the expenses of running the business on a day-to-day basis. Okay, so that's revenue expenditure or improvement in the PPE, but it only maintains the earning capacity. Then in that case, we don't add it to the cost of PPE. What you need to do is expense it. So example of that is your repair and maintenance. Okay. So example, repair and maintenance are, do you all own a car? No. For those, or motorbike, do you all own a motorbike? Yes? Okay, so what was I trying to say? When you fix your motorbike, will you be able to drive faster? No, right? It's the same as before, isn't it? Okay, so that's what it means. It maintains earning capacity. All right, so any repair and maintenance that you incur on your motorbike or your motor vehicle, basically you have to expense it off. You cannot add it to your cost of your motor vehicle. Okay, so we're done. So that's subsequent expenditure. First time expenditure, easy. Okay, if it's purchase of machinery or whatever, it will definitely be capitalized as PPE. But subsequent expenditure, then you have to be careful. Should I add it to your PPE or should I expense it off? So it all depends on whether it maintains earning capacity or it improves earning capacity. Clear? Okay, so now we're going to look at revaluation model. Under the revaluation model, okay, what we're going to do is we're going to revalue the asset at fair value. Okay, then after that, even though I've increased in value, I still need to charge depreciation. Okay, but if you notice, what do I less out here is subsequent accumulated depreciation. What does that mean? Is after I revalued, I start fresh the AD, the accumulated depreciation, I start from zero again. So what happens to the existing accumulated depreciation? I clear it off. Okay, so that's why it's called subsequent accumulated depreciation. Okay, and then again, if there's any indicators of impairment, I need to check, and if there's any, if there is a loss, then I need to less again subsequent impairment. So before that, any impairment loss, clear off. Okay. All right. So so here the table is, how do we determine fair value? For land and building, we determine supply equipment is usually through appraisal. We determine the fair value through appraisals. Okay. But specifically for land and building, you actually get someone that is an expert, okay, to come and value your land and building. You cannot simply say, oh, I want to value this land and building and it's going to, you know, I think it's worth 100 mil or 1 billion. it's not reliable. So you need to get someone that's reliable, which is the professionally qualified valuers. They are the one that should come in and value it. Okay, value your land and building.